What's up? What's up? Welcome for the pre-market pump today. We got some decent action today so far overnight. Currently sitting down 40 bucks though. I was getting a little antsy with NVFY and LAES. It's getting a little bit more aggressive than than I wanted to, with some little bit riskier setups, which didn't work out. But look at this stock, CING. This thing, when I was doing my pre-market, or not, sorry, my post-market recap, this thing ripped from 3 bucks all the way up to about 12, 13, 14. And then later in the evening, this thing ripped from 10 bucks all the way up to $22 a share. Crazy move. So from $2 on the day all the way up to $22 on the day. Crazy move. And since then, we've had some decent momentum on LAES, which I did miss. I didn't sit down until about 7:30, 7:40, but it did rip from 120 all the way up to 386. This is crazy. So that's about 200% move right there. And then we get a couple of potential setups here on NVFY as well. This one from about $2 up to $5.99. Pulling back. This one's a little bit of a wonkier chart, but we can go through the trades that I took so far pre-market that didn't quite work out. Good morning, Mikey T. Andres, good morning. Could get some decent momentum today after 9:30. Hopefully enough at least to get green today. But if we see something strong, man, this could be like a huge green day as well. So, but we'll go through the trade that I took so far. So LAES, I took this one first. I bought the dip down here at 239, 240, looking for at least a somewhat retracement, maybe back to VWAP, because I saw that we had some support in here on the low of the flag on the front side, so I thought we'd find some support again. So I got in there at 240, looking for maybe 250, 260 at minimum. But I just kept holding low. And I had to cut that one for a small loss. That one was a tiny loss, so 16 bucks. And then NVFY, this one I got a little bit bolder. I wanted to let this one ride. I thought this one had huge potential because it was super thin. As far as like the bid and the ask, and I thought this could start skipping dollars, so I got in here on the pullback, or not even quite the pullback. It was like 520. I think it was on this candle, on this candle here at 520. Got in at 520. We ripped up to, well, not quite ripped, but we pushed up to 577, 578. So I was up like 20-25 cents a share. I was only in on 50 shares, but you know, I could have took my green up here at $5.99, but I wanted to be a little bit more patient, because I thought once we broke 6, we could really start to rip. So we pulled back again, and like now I'm in the red, and I was holding this whole time. And I was looking to even buy an average down, which would be breaking my rules, and because I was really looking for that next push up to 6. But then once we broke this low here, this previous candle low, I cut it for about a 50-cent loss or so. But it was only on 50 shares, so I was a little bit more comfortable kind of holding it in the red since it wasn't large share size. But definitely not a good habit to have. I hate holding in the red. I hate it so much. I hate holding in the red. So the way that I avoid that is just by trading the market open and then only risking break even or small loss. But I don't like holding 50 cents in the red. It's just not a good habit. But I thought it's had potential. I was on a small share size, so I was a little bit more comfortable kind of holding a little bit in the red in case we did curl up and see the breakout. I could maybe add into it. Those were my two trades though. That one I was down 35 bucks, but made back about 10 bucks on this small pop here off VWAP. So keeping it tight, you know, I don't want to get too far into the red. You know, I don't want to capitulate down 100, down 200, down 300. Because I think today has some great potential. We just saw a move for 500% on CING. We saw a 200% move on LAES. So I think we're going to get some decent opportunity today. And I don't want to strike out too early because I want to be able to get green and have a decent green day. So I definitely feel I think we're going to be able to get some solid gains on the day. So staying positive. Why do you trade pre-market when you keep telling us your recaps that you don't trade good pre-market? It's not that I don't know. That's a tough question. You're just throwing right at it. You know, sometimes I think the setups just look too juicy and I just can't help myself. But it's not that I don't make money pre-market. I am net green pre-market, but my profit factor is 10%. I can take a look at I did sign up for the, let's see here. Let's see what we can do. Yeah, my profit factor is only like 10%. So, you know, it's not like I don't make money. Like I could trade pre-market and make money, but I make a lot of bad trades. So, you know, I do try to keep it my big size at the open. I'd never go big size pre-market because of that. But if the market's hot, like I'll trade pre-market. Like if the market's been pretty decent, and you know, after seeing a 500% move, I would definitely be more open to trading pre-market. I said I roll with my broker to not let me trade pre-market and after hours, so even if I try Dash Trader Pro when I execute my trades, because CMAG has put a limitation on the account. Yeah, so CMAG is great because they can put those limitations on. Unfortunately, Thinkorswim does not have that option, or TD Ameritrade or Schwab or whoever the heck is servicing my platform. I don't know if I've actually completely switched over to Schwab yet, but yeah. So my broker, I don't think they do limitations. Maybe Charles Schwab will start doing it now that they bought out TD or Thinkorswim or TD Ameritrade. Maybe they'll start putting the limitations on. But yeah, it's hard to stay disciplined. So a lot of the times what I do is when the market's slower, I don't wake up until around like 8:15, get my coffee, kind of get situated, and then do my stream, because it limits the amount of time just me sitting and looking at the screens. It's really hard to stay disciplined when you're sitting down looking at the charts and watching stuff go without you. So yeah, the way to minimize that is just by sleeping in a little bit. You know, taking an extra hour and a half of sleep. But you know, unless the market's hot, you know, I thought the market would be. You know, it is pretty hot actually. It's not cold. And some of my biggest days are like when pre-market I'm up like $100, and then at the open I make another 300 or 400, and then I'm up like 500 or 600 on the day. Why do you prefer stocks that have high-level institutional owners? I don't specifically look at the high institutional ownership. That's not something I really look at explicitly. I do want to just look at the float though. So I don't know which one has high institutional ownership. We'll take a look here. Maybe MBOT. Let's see. No, it only has 1 million shares. Yeah, I don't really look at high institutional ownership for trades, but the one thing that can do is if there's a high institutional ownership, it can take a high float stock and make it a lower float. Because let's say institutional ownership, you know, maybe the stock has 100 million shares outstanding. You would think that that's oh my God, the float is huge. It's 100, let's say it's 100 million shares outstanding. Oh my God, this is a large, medium-sized company. You know, it's not going to make any big moves. But if the institutional ownership owns, let's say, 80% of the shares outstanding, that leaves a 20 million share float, which is 20 million shares available to buy or sell on the market. And so that can take that bigger company or more shares outstanding company to a lower float company and actually can make moves that are more similar to the low float stocks, even though it has a large shares outstanding. So it's something to look at, but I don't specifically say like, oh, this stock has a high institutional ownership, let me just buy it. Because I'm sure there's other companies that have high institutional ownership, but you know, they're still moving slow. Like Bank of America, Tesla, all those types of stocks I don't really trade. But they have probably high institutional ownership. So it looks like I'm coming into the open slightly red today, but I think there's gonna be a great opportunity to get green, but I don't want to capitulate. If there are two stocks, one has high institutional ownership and the other one doesn't, would you see the one as high institutional as more bullish? So yeah, you could make the case that if the average investor, I wouldn't say traders, but the average like investor is looking to buy the company off of, let's say, the news, you could say that the institutional ownership would show a little bit more of a bullish indicator because there's big institutions willing to hold this stock and they have bigger investments. So you could say that people will be more bullish on the stock just because of that confidence that they'd have from the institutional owners. But it really comes down to how it reacts to news in the end. You know, how the stock reacts. You know, the stock may have high institutional ownership, may have news as well. The float may be small, but if there's no volume on the chart, then I'm not trading. Like, it's so important that the chart is actually giving opportunity, that there's high volume, we're on a front side move, or over VWAP. You know, that's so important that I'm not willing to trade a stock unless that's happening. Otherwise, like, either I'm trading a stock that has no volume, or I'm trading a stock that is like kind of something like this, where it's just like had that huge spike and then now we're below VWAP, and you know, we're so far off of the highs that it's not really a front side move anymore. I do very well on front side moves with high volume. Or you have something like LAES, like you may get that front side move, but like now it's, look at, like, who cares if this thing has a high institutional ownership? Who cares if it has news? Who cares if it has a low float anymore? This thing is trashed. This chart is complete trash. I can't trade this. This is exactly what I'm talking about. It's like, this is the most important thing, is the chart. PE ratio, I don't look at PE ratio. That's what price to earnings ratio. No, if I was doing more of a position sort of style trading, you know, maybe swing trading, if I was doing like swing trading, or in like position investing, then I would look at that. But PE is not going to have any effect on how this chart is moving with the way that I trade, and in the amount of short term, how short term I trade is not going to really influence that. Yeah, so Baja Express, yeah, CING went all the way up to $22. BBLG moving. Let's pull up BBLG. Okay, let's see if we got news here. I think this one might have a larger float. Let's see. Okay, let's see this here. Okay, 10 million share float. Short float, 0.5%. So not very, you know, not really important since it's too small. Insider ownership, 8%. So that brings the shares outstanding. Since they own 8% of the shares outstanding, it brings the float down to 10 million shares. Let's see if there's news on it. Announces 1 for 8 reverse stock split. That was a couple weeks ago. I don't see any news on it. It's still light volume. It's still light volume, so you definitely want to be patient. Yeah, I can pull up CING if you can't see CING Baja. So this is the chart on CING. I did very well on it this morning, or yesterday morning, but man, this thing ripped, absolutely ripped from 4 all the way up to 22. I wish this could have happened at like 9:30 or 10. It could have been a massive day. It could have been a huge day, record day. But can't control the market, does what it wants, and I'm sure as hell not trading after hours. I know some people were. I know some people were trading after hours and did pretty well on it. So it's good that we see CING kind of holding its support levels. Even though it's faded off the high, it's still like around a decent level. You know, it's still holding, you know, it didn't like retrace all the way back down. This is what you don't want to see for momentum. When it rips up and comes right back down, at least it's holding somewhat up, like maybe half of its move, which is okay. We could still get a move on this, a couple opportunities on this. I don't know if it's something I would trade just because of the downside risk seems a little high. Do I think it's going back up to 22? I would say likely not, but I wouldn't be surprised if we see maybe 15, 14, at least a break of VWAP maybe. But the downside risk is high for sure. But you know, at least it's holding up and it's somewhat good for momentum still in other stocks that may be popping up. What's going on with NVFY pump? I don't know. This thing, I mean, it moves so fast in such a short period of time. I just think it couldn't really hold the highs. Whenever you get something that moves like in 3 minutes, it like moved 230%. The candles are freaking huge. I don't think the market can sustain a move like that fast near the highs. Like even here, it's moved from like 3, it's like a 40% pop, 40%, 50% pop in 3 minutes. So massive move, but anything like that, it's gonna be really hard to hold the highs. Very volatile, great opportunity. But yeah, holding the highs definitely does not seem like this this ticker likes to do that. So I would say this is a little bit riskier stock. We can take a look at the daily chart. And I know this one has a low float. Yeah, it's got a real tiny float. 1 million share float. Let's see if it has news. Doesn't have any news. Yeah, it's another thing. It doesn't have news. So we topped out at 6. I think we could possibly see 7. I'll put a level out here. Has a history of making moves. This thing went from 10 all the way up to 36 back in the day in April 2021. I think 7 is possible. I think NVFY is pretty decent, even though it has no news. I think the daily chart looks pretty decent as far as maybe at least another push higher. LAES is too far off the high. I don't like that anymore. CING, maybe, you know, we get like a push and a test of 14, 15, 16 before we fade. But I don't know if this is, I doubt this is going back up to 22. It's got to be really strong. Maybe we really retest, yeah, VWAP. Maybe we retest VWAP and fade. You also have to remember the big players in this. The big players, like we're talking about the people who have like infinite deep pockets. These guys are not going to want retail to be holding this short. They're going to want to scoop up those shares because they don't want retail holding this and making a 10 bagger, 50 bagger trade going short. This is a great opportunity going short. So you know what could happen is we could see a nice push up, kind of squeezing out any of those newbie shorts or any shorts that aren't held by institutions. And then before they move lower, these guys have infinite pockets, so these guys can manipulate the price. And they want to be able to make as much money as possible. They want to scoop as many shares as they possibly can before the real move. So you know, you might see a push higher, kind of squeezing out any shorts that are in the money, about $10, $12 a share, and then an aggressive move back down. You see that all the time. There's limited supply, so it's easily manipulated. Can be easily manipulated. That's why these institutions, that's how they can manipulate this price. You can't really manipulate Bank of America because the amount of money you need to move that stock is gazillions, because of just how many shares are available on the market. But with something like this, CING, this thing has a sub 1 million share float. So to own, you know, one institution can own more than half of the shares outstanding, and that's enough to really influence the stock and be able to have control of the price. And then they can move it wherever they want. They can stop out if they have, and if they have level 3, they can see where your stops are, so they can manipulate the price, stop you out, scoop up those shares and rip it long, or they can dump it short, and you know they'll be able to make some massive gains on it. BBLG, this could be a breakthrough 7. Weak. Thank God I didn't go in for that. Do I ever go short? But yeah, the trick is like, you just want to be on the right side of the trade. You know, the stock can be manipulated. Most stocks are manipulated in the small caps, but you have to be on the right side of the trade. So it can be manipulated, but as long as you're on the right side of the trade, then you're good. And I do the best on stocks that are manipulated. I do best on stocks that are ripping down, like dumping down, stopping everyone out, which is like, you know, let's say a 50% dump in the stock price, and then an absolute rip back up 200%, then a huge dip, and like clearly there's some big players manipulating the price. But, you know, someone like me, those are the opportunities that I do very well on. Just about being on the right side of the trade. There's a nice push there for the break of 7. But we can't hold over 7, which is not good. You got to close over 7 if you want it to be a nice front side move. Another thing is, keep in mind, we've been getting a lot of moves from recent reverse stock splits. The reason that is because that's sort of like a theme right now, but the reason that is because the reverse stock split, it changes the float by a factor of, let's say, 5, 10, 15, 20, whatever the reverse split is. And the float is that much smaller by that factor. And what a lot of these institutions do is it's easier to push the price. It's easier to manipulate the price. So, you know, they might push it up to stop out any shorts, and be able to, you know, capture those shares that they're holding. That's kind of what we got in MULN, because I don't think there was any news on that. I freaking like ripped from like 8 to like 30 or something like that. Do I ever go short? I don't go short. It's just too risky. With going short, you can lose more money than you have invested, because the stock can go infinite. I could hold one share of a penny stock, and if it goes to, let's say, $1 million a share, I could lose everything that I own. I could owe the broker billions of dollars if the stock went to infinity. So it's really risky. Definitely have to know what you're doing. You definitely have to be disciplined, because if you let even one trade, if you break your rules on one trade going short, you could lose your house. You could lose the clothes off your back. Like, that's some serious risk, and that's something that I want to take, because black swans happen. You can get stuck into a halt up, and it can resume into infinity if it wants to. I mean, you had HKD. HKD was a massive move. Like, that was a black swan event. You had that one stock that halted up at like $20 and resumes at $500. you could lose. Before you know it, the broker's knocking on your door and they're telling you that they own your house and your car and your wife and your kids and your clothes and your couch. Before you know it, there's going to be people entering your house taking all your damn furniture. I don't want that to happen. So from a risk standpoint, I only go long because it's comforting to know that even if I break all my rules, even if I fuck up and I fuck up and I fuck up, I can only lose what I have invested in the stock. I can only lose whatever I put in the stock. I can't lose more. So, and that I can bounce back from. I can bounce back from that. But, you know, if I take a short position and I go completely bankrupt and I have to owe my broker hundreds of thousands or millions of dollars, like, I may never come back from that. That fuck up may ruin my life. So I don't want that to happen. They can have my wife. That's funny. Do you recommend trading from a pension account or trade in a professional corporate account instead of a personal account? A retirement account, that's definitely higher risk because you're fucking with your retirement. Yeah, and like messing around with your retirement is risky. So you definitely have to know what you're doing if you're messing around with your retirement. So I don't know, it depends. I would say have some, like, you gotta have at least 10 years experience. I would say at least confident that you know what you're doing to trade in a retirement account. A professional corporate account, I'm not really familiar with that. I'm not sure what the difference is for the corporate account versus the personal account. Oh, it saves you money on taxes. Yeah, if it saves you money on taxes, then yeah, you could totally do that. Personal account, you're going to be paying just regular income taxes, so it actually may be lower up to a certain point. Let's say if you're only in the 15% tax bracket, then trading the personal account, because you'll actually save more money in taxes. But once you pass the 20% tax bracket, you're better off forming a corporation and trading in a corporate account, because you'll get taxed at like the corporate tax rate, which I think is like 18% or 20%. So it'll be smart to do that after you pass like the 18 or 20% tax bracket. So it really depends. And then also you can write off expenses as well. Yeah, let's click that like button. Support the stream. If you're a new viewer, hit the subscribe button. You could rep the new sub box up in the top right of the screen. We got Dex. Dex has been up there for a couple days now. We'll see if anyone can take his spot. But yeah, I'm not even formed. I don't have an LLC yet. I just don't think I've made enough money to really justify doing it. Because I'm just not in a high enough tax bracket yet. But when I do surpass that level, then it's definitely gonna be smart to do that. Because then you can write off your subscriptions, your office, your home office, your desk, your computer, your monitors, all this stuff, subscriptions, and that could lower your taxes for your business, and then you'll be in a lower bracket. Another thing to keep in mind as well as another good idea is, if you know what you're doing, trade in your personal account. Trade in your personal account until you make enough for the year to kind of live off of. And then the rest of the time, trade in a Roth IRA. And that'll all be tax-free. All the gains in the Roth IRA will be tax-free. And you won't be able to use you won't be able to use leverage, but you'll be able to use settlement margin on it. So essentially you'll be having tax-free gains, which is great, but definitely want to know what you're doing if you're going to be messing around with your retirement. All right, I am going to get prepped for the Open. Going to be watching LAES. No, not even. I'll keep it on watching the side chart, but my main watch is going to be NVFY and CING. So I'm going to keep that on watch. Hope you guys get green. If you guys are a new viewer, hit that subscribe button, hit that like button. Let's go over the disclaimer real quick. All this information is for educational and entertainment purposes only. I am not a licensed professional of any sort, and all information is not considered as legitimate investment advice. So I don't have any authority over your decisions, and you're responsible for doing your own research before buying or selling. Day trading is risky. Most people lose money. My results are not typical, and there's no guarantee that you'll have similar results by watching my videos. Also, be wary of scammers and impersonators. I will never ask for money or personal information, and there have been reports of fake Triad trading accounts trying to scam people out of money. So be careful with that. Hope you guys have a great, green, awesome day. I'll catch you guys for the post-market recap.